Mark Zuckerberg offered her $1 billion to buy out her company, but she said no. Then he continued to hire 5 of her co-founders out from under her. Last week, she released her first AI model, and it interrupts you mid-sentence. I'm Ranali. This is the GenZEO Playbook podcast, where we break down real founders' frameworks into ones that you can actually use to build and scale your own company. Today, we're breaking down Mira Murati's framework. The OpenAI CTO who walked away at the top, founded Thinking Machines Lab at 36, raised $2 billion at a $12 billion valuation in less than 5 months, turned down Zuckerberg's acquisition, lost most of her founding team to OpenAI and Meta, and just shipped a model that's either a category-defining breakthrough or the most expensive research paper in Silicon Valley history. And we'll get into the debate in a second, but I want you to walk away with 3 different frameworks by the end of this episode. Number 1, the optionality audit. How to spot when staying has quietly become the more riskier move. Number 2, conviction capital. How to raise on belief before you even have a product. And number 3, founder market timing. Why when you move matters than who you are. And there's a bigger question underneath all of this. If the safest seat in the room is the one you should leave, then how do you know when it's the right time? Anyways, let's build this playbook together. The first framework. I want to start with the setup. It's September 2024, and Mira Murati is the CTO of OpenAI. She runs ChatGPT, DALL-E, Codex, and Sora, and she was at the time the CEO for 3 days during Sam Altman's firing. She's currently 35, and she has around 6 years of equity in a company valued north of $80 billion. From the outside, it looks like she's won, but then she posts a note on X. She's leaving. No new job announcement, no company announcement. Just, I want to create the time and space to do my own exploration. 5 months later, Thinking Machines Lab is incorporated. It's now Feb 2025, she's 36, and by July, she's raised $2 billion at a $12 billion valuation with no public product. Most people would read about this story and think, of course, she's Mira Murati, she can do anything. But that's the wrong frame to look at. The right frame would be, she ran the math and understood the book. She looked at OpenAI from the inside and saw what the org chart was about to do. Altman back in power, the board is going to be reshuffled, decisions getting more centralized, and her ability to shape the direction of the most important AI lab in the world was shrinking, not growing. From the outside, staying looked safe. You had the big title, big equity, and big stage. But from the inside, staying was a slow leak. So every year you stay in a role where your decision-making surface area is shrinking, you're not playing it safe, you're paying a tax on optionality. The optionality audit. You can steal this. Here's how to actually run an audit on your own situation, whether you're a startup, in a job, or stuck on a project that stopped you from growing. Step 1, the decision surface check. Write down the last 5 meaningful decisions you made at your job or working on your project. Were they yours, or did you just execute someone else's? Number 2, the 5-year forecast. Imagine yourself with the same role and the same title, but 2 years out. Are you closer to what you actually want to be doing, or farther from it? And number 3, the quiet cost line. List what you're not doing because you're here. The startup you're not starting, the skill you're not learning, the risk you're not taking, and try to put a number on it if you can. If the quiet cost line is bigger than what you're actually getting paid in cash and learning, staying is your risk. The optionality audit isn't permission to quit your job, it's permission to stop pretending that staying is automatically the safe move. Now, I want to dive into the second framework and a bit about the funding round. It's currently Feb 2025, Thinking Machines Lab is incorporated, and by April, she's running a seed round with a $50 million minimum check size. By July, the seed round is closed, with $2 billion raised and a $12 billion post-money valuation. For context, this was one of the largest seed rounds in Silicon Valley history. The investors, Andreessen Horowitz leading, plus Nvidia, AMD, Cisco, Excel, ServiceNow, and Jane Street. The government of Albania, Mira's home country, even invested $10 million, which required an amendment to their national budget. The product at the time of raise was still in development. The team, around 30 researchers, mostly poached from OpenAI, Meta, and Mistral. But let me say this again, $2 billion, no product, just a team of researchers and a thesis. So there's a cynical read to this. She got a $12 billion valuation because she was the OpenAI CTO. Sure, her record matters, but here's what the cynical read misses. Your professional background will get you into the meeting, but it doesn't get you the check. Mira walked in with 3 things. Number 1, a sharp thesis. Thinking Machines wasn't trying to build a bigger or better version of ChatGPT. The bet was on post-training and customization, making models more adaptable instead of just larger. That's a contrarian position in a market obsessed with scale. 2, governance terms most founders couldn't dream of. She structured the company so that her vote carried weighted majority decision-making on board. Founding shareholders got voted weighted 100 times normal shares. That's not standard, that's conviction translated into a cap table architecture. And number 3, she made the round itself a filter. $50 million minimum check size. If you couldn't write it, you weren't at the table. That's not greedy, that's signal management. And here's the receipt for how seriously she took her own conviction. After the round closed, Mark Zuckerberg reportedly offered roughly $1 billion to acquire Thinking Machine Labs outright, but she turned him down. She'd rather build her own thing than cash out at 9 figures inside of Meta. This is what I call conviction capital. It's the version of fundraising where the terms, the cap table, and the exit conversations are all part of the pitch, but not just the deck. The myth says, raise as much as you can from anyone who'll write you a check, and take the acquisition when it comes. The reality is that the founders building the most ambitious things raise more selectively, structure governance around their own conviction, and turn down billion-dollar exits because the bet is bigger than the shortcut. Conviction Capital Playbook. You can also steal this. You're not raising a $2 billion at a $12 billion valuation tomorrow, and that's fine, but the main principles still apply. Step 1. Write a 1-page thesis. Before any pitch deck, write a 1-page document on what you believe is true about your market that almost no one else believes. If it's not contrarian, it's not a thesis. It's a summary. Step 2. Design your terms before your deck. Decide what governance, ownership, and control you actually need. Most founders negotiate this last, but Mira negotiated it first. Know your non-negotiables before you walk into a room. And step 3. Build a no-go list. Step 3. Build a no list. Make a list of investors you will not take money from and offers you will not accept. Wrong stage, wrong values, wrong reputation, and a wrong exit. A no list does more for your fundraising discipline than a yes list does. Conviction capital isn't about being arrogant, it's about pricing your belief in your own thesis into every part of the deal. And now the last framework. Now I want to zoom out. Why did this work in early 2025 and let's say not 2022? Well, in 2022, the AI playbook was build the biggest model, scaling was a moat. But by 2025, that script had cracked. Compute costs were exploding. Frontier models were converging in capability, and a Chinese lab, DeepSeek, had just shown that you could get competitive reasoning performance with way less compute. The market had begun to shift. The bet on bigger started to look shaky, but the bet on smarter and more customizable has started to look more obvious. Mira didn't just have the right resume, she was the right resume at the exact moment the market was ready to bet on her thesis. This is the part most founders break down and miss. They treat the founder like the only variable. Mira's amazing, and that's why it worked. But the world had to be ready for the bet. 6 months earlier, the round didn't close at $12 billion. 6 months later, 3 other ex-OpenAI execs are running the same play. The window was tight, and she walked right through it. And honestly, this story is still being written, and it's been brutal. October 2025. Tinker, the first product, ships. It's a fine-tuning API for developers, with a niche audience, not a flagship product. In the same month, co-founder Andrew Tullock defects to Meta, reportedly for a package worth $1.5 billion over 6 years. November 2025. The follow-on round at a rumored $50 billion valuation enters early talks. Jan 2026. Co-founder Barrett Zoff and Luke Metz return to OpenAI, and the $50 billion round never closes. In spring 2026, Meta has hired 5 founding members of Thinking Machines Lab, Of the original team, only John Schulman is still at the company. Founder Market Timing Playbook. This is the last playbook you can steal. Most founders obsess over why me, but the better question is, why now? Step 1. Map the 3 shifts. For your idea, name 3 things that are true about the market right now that weren't true 2 years ago. Technology, regulation, customer behavior, cost curves, whatever. If you can't name 3, your idea isn't a 2026 idea, it's a 2022 idea showing up late. Step 2. The 6-month rule. Ask yourself, if I waited 6 months to start this, would it still be a fresh idea? If the answer is yes, no rush, then your timing might be a little off. But if your answer is no, 3 other people would catch up and you're probably on time. Step 3. Bet on your unfair window. Identify the specific 6 to 18 month window where your background, the market shift, the technology overlap. That's not luck, that's a window, and make sure to move inside of it. If your why now is just that AI is hot, you don't have a why now, you just have a vibe. So who is Mira Murati in the GenZEO Playbook podcast? Well, she's not Supergirl, but she's a young executive who saw that staying at the most powerful AI company on earth was the slower bet, walked away to build her own thing, raised one of the largest seed rounds in Silicon Valley history, turned down billion-dollar acquisitions, lost most of her founding team to bigger and better players, and just shipped a model that's either 3 years ahead of OpenAI or 3 years too early. But we won't know which until OpenAI makes their next move. So that's not a closing chapter, that's a cliffhanger, and you're watching it in real time. So the playbook for us is simple. Steal the systems that work. The Optionality Audit, Conviction Capital, Founder Market Timing. Question the assumption that staying somewhere prestigious is automatically the safe move. And build companies your future self isn't ashamed of. If you want more breakdowns like this, with real founders, real frameworks, and no fluff, subscribe to the GenZEO Playbook podcast on YouTube and wherever else you listen. Once again, I'm Rayan Ali. This is the GenZEO Playbook podcast, and I'll see you in the next episode.